Hi, welcome to this quick tutorial about product costs and period costs. We are especially concerned with costs for internal decision making. This is one of the most important things when we're talking about decisions that managers make. We need to know what things cost. We need to consider all costs incurred across the value chain. Managers need this information to determine the profitability of each product as well as to make other important business decisions. So managers define costs based on how the information will be used. Will the information be used, number one, for internal decision making or number two, for external decision making? So that kind of dictates how we define cost. Now, when we're talking about cost, we're talking about this whole arena. Total cost is all resources used throughout the value chain, and managers need to first and foremost need to ensure that the price covers all costs plus returns a profit. Costs for external financial reporting. So let's talk about those first. Those must follow generally accepted accounting principles. We have product costs, which are incurred by manufacturers to produce their products or by merchandisers to purchase their products. All costs in the production or purchase component of the value chain are considered to be product costs. Period costs do not get treated as inventory. They are immediately expensed, meaning they show up on the income statement that period. They are incurred in other components of the value chain other than production or purchase. These would be operating expenses or selling, general, and administrative expenses. A company's total costs can be divided, again, as we said, into two categories. Product costs, which are those costs treated as part of inventory until the product is sold, and period costs, which are those costs expensed in the current period regardless of when the inventory is sold. Generally accepted accounting principles requires this distinction for external financial reporting. Merchandising companies' product costs include only the cost of purchasing the inventory from suppliers plus any costs incurred to get the merchandise to the merchandiser's place of business and ready for sale. Typically, these additional costs include freight in and import duties or tariffs if the products were purchased from overseas. Why does the cost of inventory include freight in? Well, because we need to pay freight in to get it to our place of business. So that's part of the cost of the inventory. Manufacturing companies' product costs include only those costs related to producing or manufacturing their products. Manufacturers incur three types of manufacturing costs when making, say, a vehicle: direct materials, direct labor, and manufacturing overhead. Okay, so we have direct materials. Direct materials are the primary materials that become a physical part of the finished product. For example, if we're building a car, it would include the steel, the tires, the engine, the upholstery, etc. We can trace the cost of those materials, including any freight in and any import duties, to specific units. They are direct materials now. Direct labor is the cost of compensating employees who physically convert raw materials into the company's products. Direct labor includes the wages and benefits of machine operators and technicians who work directly assembling the product. Okay, and then we come to manufacturing overhead. That's all manufacturing costs other than direct material and direct labor. There's three main components. Okay, indirect materials include materials used in the manufacturing plant that are not easily traced to individual units. For example, they might include janitorial supplies. It might include oil and lubricants for the machine. Okay, then we have indirect labor. That's the cost of compensating all employees working in the manufacturing plant other than those employees who are direct labor. So this might be supervisors, security people in the plant, things like that. And then we have this all other indirect manufacturing costs. That would include things like depreciation on the plant property taxes, plant insurance, things like that. So we can see we would split our costs into, as a manufacturer, our costs would be split into product costs and period costs. And then within product cost, direct material, direct labor, manufacturing overhead. So this is a nice graphic of those product costs versus period costs. And then we have one other definition that we see prime costs and conversion costs. Prime costs are direct materials plus direct labor. So those are called the prime costs. Then we have conversion costs. Those are the costs of converting the raw materials into finished goods. So that would be manufacturing overhead and direct labor. We cannot add prime costs to conversion costs because it would double count direct labor. So these are two independent definitions of cost. Now we're going to go through an example. We have Turtle City Electronics develops and manufactures smart home devices. So we're going to talk about a series of costs and say whether they're product cost or period cost. So first up, we have the plastics used in manufacturing the products. Would that be a product cost or a period cost? That would be a product cost, right? Because it's part of the manufacturing of the product. Next up, salary of the company's president. Is that a product cost or a period cost? That would be a period cost because the company's president is not part of the manufacturing process. So the company's president is an operating cost, so that would be a period cost. Next up, depreciation on the factory building. Product or period cost? Because it relates to the factory, it is a product cost. What about insurance on the factory building? Product or period cost? That is a product cost because it relates to the factory. Okay, salary of company sales staff. Okay, they are not part of the factory. They are part of other expenses, so they would be a period cost. What about the costs of the sales office? Again, that's a period cost because it's not part of the factory or manufacturing. That's it then, we're done. This video was created and narrated by Dr. Wendy Tietz. Have a great day.